folks, Dan Frio here with your closing bell for March 3rd, 2025. So what I'm going to do today is put this into context, today's market. I don't know if you saw it, but I'm going to show you how this economic news, along with tariffs and immigration, caused a huge sell-off on Wall Street. And then that also pushed up the VIX. Look at the VIX right over my head. That's the anxiety level on Wall Street, up 16%. Not good news for that area, but the good news, the bad news for the equities, good news for bonds. We're seeing mortgage rates ease just a little bit today. Well, it happened after the bell or close to the end of the day. So you're going to probably see a little bit of a pickup tomorrow right through here. So that's good news. So let's actually put all this into context because I'm going to end with this right here. Yahoo Finance posted this not too long ago, and they said why you should marry the house and date the rate. And I'll give you the context behind that at that point. So let's get over to it. My name is Dan Frio, and I do this report twice a day to inform you guys what the heck's going on with real estate. So I give you the context of the daily news, how that affects real estate in this market. And our slogan here is one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how do we do that? All that information at the end of this video, so stay till the end. So here's what happened to rates today. Nothing. Okay, nothing. There was a little bit of a rally at the end of the day that we're going to go over here in 1 second. So let's go through the economic news for today. And a lot of cracks in the foundation are starting to occur, especially in manufacturing, construction, GDP, and the costs of things are also going up. So that's what actually between that and the tariffs and everything else that's dropping right now, the markets are skittish. So we had a complete sell-off through here. So when people sell equities, here's what normally happens in a normal market. They're going to take their money out of the equity market and they're going to put it somewhere. They're usually going to park it in bonds, okay? Part of the bond market is right through here. This is mortgage bonds, and this had a nice little rally today. Let's see a one-day rally right through here. So mortgage bonds are up 11 ticks. Most of it occurred right at the end of the day, so not a lot of lenders repriced for the day. So basically saying right now it's steady, but I'm expecting tomorrow morning, with really not much data coming out, that you're seeing right through here, nothing really coming out tomorrow. Expecting rates to ease a little bit more tomorrow, so I'm not locking in my clients this evening. So I want to show you some of the economic news that just came out this morning. I'm going to bring it over to Rick Santelli over at CNBC, because what I like to do is share with you guys economic news that's affecting the markets, right now. Because if you're looking to buy a house or maybe looking to refinance, you need to know what's going on right now. So Rick over at CNBC, and he's going to give us a lot of the manufacturing numbers that just came out this morning. And there's not a lot of good news in what he has to say. So take it away, Rick.
This air pocket might be explained by ISM and just crossing the tape. Let's get to Rick Santelli. Hey, Rick.
Yes, definitely. There's some weakness creeping in. Let's start out with construction spending. Our January number expecting down a tenth. We end up with double, down 0.2. Down 0.2 would be the weakest since SEPA 24 in terms of month-over-month change. Now let's get to the money numbers, shall we? ISM, these are the manufacturing PMIs. Expecting 50.7, it comes in manufacturing light, 50.3. That is the weakest level. Well, consider this. There's a positive here. 50.3, last look was 50.9. So we have January and February now both back-to-back over 50. That is.
Okay, so one thing I want you to understand is as he's talking, as he's given this data, this is live coverage that, this is from this morning. So this is actually him coming out live, and you're seeing the markets immediately react. So just pay attention. It's kind of cool.
This is the good news. First time that's happened since SEP and October of 22. Here's where it starts to get a bit dicey. Prices paid, 62.4, well above expectations, well above 54.9 in the rearview mirror. That's the highest prices paid since June of 22. But that doesn't explain yields going down. Yields are drifting south. They're ignoring prices paid. Weakness in new orders, 48.6, weakest since October of last year, and employment on the week of employment weakening, probably what is moving the market here, 47.6, the weakest since Dec of 24, which isn't that long ago. But the fact of the matter is we had one reading above 50, 50.3 in Jan, first in SEPA 23, highest since SEPA 23, and now we reverse back down. We see that we're hovering at 420. 420 would be down 2 basis points on the session. Sarah.
So that's what he's saying. Now, when he's saying it's down 2 on the session, that means the yields are starting to come down. So that was the reporting that was out today. And then for the rest of the day, this is just basically what happened. There was a complete sell-off on Wall Street. They're still saying, between the Mexican and the Canadian tariffs, that's going to loom and be inflationary, kind of hopefully over through here with oil continuing to ease a little bit. This is going to help on the inflation front. Folks, we're just going to have to see how all this plays out. Let's get over to what we're going to have coming in the rest of this week. Tomorrow, there's really nothing coming in except Williams speaking. He sits on the Federal Reserve. Depends on if he's hawkish or dovish, and I'll come out tomorrow morning with tomorrow's video, and we'll go over what I'm expecting to hear from him tomorrow. Wednesday, this is when we start getting some of the payroll numbers that they were talking about on CNBC. Got ADP payroll numbers coming out on Wednesday. I don't really give this a lot of credence. They always have huge revisions in their numbers, so we'll at least see how that data comes in. Then on Thursday we have continued jobless claims. These are numbers coming in from our government numbers right through here. So that's going to give us a lot of the employment data, and then we're going to get on Friday we're going to get to actually the unemployment rate and things that are going on through like average hours worked, as well as hours earned. So we're going to see how that is impacting the inflationary numbers, because that's the main goal of the Fed right now, to now squash inflation. It's going back and forth. 8 months ago, inflation was cured. Now they just wanted to cure, make sure the job market didn't just get crushed. Now the job market, it's staying steady right now, but with all the tariffs and everything else, it's getting to be choppy out there, folks. So right now, here's my expectations. Well, let's get over to this saying right through here. I wanted to come back to here. I almost forgot about the caption. Not too long ago, Yahoo Finance came out and said why you should marry the house and date the rate. And I think David Ramsey actually said this. I don't know who originated this. And basically what it was saying is rates are going up, and rates hit 8% in October and November of 2023. So if you bought at that time, check out the end of this video. I'll show you how you reach out to me. Maybe we can refinance you to get you a little bit lower rate. But that's exactly right in the wheelhouse of what we're talking about. So what this said is, if you love that house, and it's a house you're going to spend 5, 10, 15 years in, and you really love that house, and you can afford it with the rates that there were at that time, go ahead and buy it, because you can always date the rate, meaning down the road you can refinance. Rates most likely are going to come down, as they've done over history. So now you're getting at that time where we have a lot of people calling in right now in the high 7s, low 8s. And guys, don't look a gift horse in the mouth. I used to say this saying: pigs get fat, hogs get slaughtered. If you're out there and you have an 8% rate and you can get 6.75 right now and not have a lot of fees, I highly suggest you do it, because you don't know what tomorrow's going to bring. But if rates continue to go down, you hit 6%, saves you another $300-400. Maybe look at doing it at that time as well. So how do you do this? And let me explain to you who I am. But let's get over to this. Here's the last segment of this. Now, who I am, what do I do? Mortgage loan officer. Been doing this for over 35 years. I'd love to work. So our slogan here is one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how do we do that? Well, it's pretty simple. I work at a federal bank. Okay, the unique thing about our bank, and the reason why I joined it and helping it grow, is not only do we have the products here at the bank, and we're a federal bank, so anywhere in the whole country we can help you, but we also have 30 other lenders where we can use their programs, their rates, even their buffer programs or niche programs, such as down payment assistance, to help you out. So if you're in the position where you really need some help, I'd love to reach out to us and get that help. So how do you reach out to us, and what do we do from here? Well, first thing I need you to do is my public service announcement. Before you call a mortgage company and get pre-qualified, or you even go out there and look to buy a car, please go to optoutprescreener.com. What this does is it stops the credit agencies from selling your. So here's what happens. Every time you apply for a mortgage, car loan, when the bank pulls your credit, the credit agency at that point will sell your data to 10, 15, 20 other lenders. They don't know anything about you other than you're looking for something. And so they're going to start just calling and calling and calling and calling. If you want to stop that, go to optoutprescreener.com. Just go down, scroll it. It'll take you literally 2 minutes. So do yourself a favor and do that. But the next thing is, how do you reach me? So right through here, here's our website. Pretty simple to navigate through. We're revamping all this and a bunch of things behind the scenes. So this is going to be changing soon. But right now, if you'd like to reach out to us and put in your application, love to help you. Just hit the apply now button right through there. If you'd like to schedule a consultation, you can do that right up through here. It's pretty simple. It just goes right to my calendar and schedules that schedule. If you're a homeowner right now and you're looking to refinance, and you're like, okay, Dan, when the rate hits this, I want to hear from you. Okay, so we can get this done before rates go back up. Go right through here, right over my head. You're halfway down my website. There's a rate watch tool. You can click that, put in your information, and I'll get that information. And as soon as that rate hits that number on the phone, we'll get that process started. But if you'd rather call us or reach out to me by email, you can do that right through here. There's our 800 number. There's my email address. If you want to reach me directly, do that. Please give me your question there, as well as your data where I can reach you back, like your phone number. Love to call you and answer any questions that you have. Thanks for watching, folks, tonight. I greatly appreciate it. God bless. Have a fantastic evening. Hope to see you back here tomorrow morning. Take care. Bye-bye.